Mortgage rates ticking up this week with the 30-year fixed at 6.86%. Once rates eventually ease and buyers enter the market, that could be beneficial for home builders in more ways than one. And joining us now is RJ Assaly, Chief Market Strategist at Toggle AI, a platform that provides AI-derived insights from market data. RJ, it's good to have you on the show. So in broad strokes, RJ, what I understand is you're using AI to make investment recommendations, and right now, based on that, home builders, you say, are looking pretty attractive?
Yes, I think home builders in 2023, they had a strong year. 2024 has not been nearly as kind to them, with the ITB ETF down, underperforming about 20% versus the broader market. But there are some bright spots. I think two key things which are screening well. Chairman Powell has sort of indicated that the next Fed action will be a cut, even if we don't know when that might be. And the market is really pricing 2 cuts by the end of the year. As you noted, mortgage rates, while they're off highs, that's been really sort of stymieing home builders. Another key piece for home builders are that lumber, a key input, is down about 20 to 30% since March. So we're starting to see that tide turn this year where we might be able to really see an uptick in home builders.
RJ, talk to us a little bit more about the methodology here. You're using AI to see trends to really help you ultimately pick some of those opportunities within this space. I guess more specifically, what are those key metrics that you're closely watching? And when it comes to home builders, how much, it seems like that very much has been the story of the last couple of months. So I guess what has changed? Is it just the fact that we're getting closer maybe now to that rate cut story?
I think certainly getting close to the rate cut story is a big piece of it. I think, we connect often macroeconomic data and microeconomic data and stocks, and we analyze both structured and unstructured. And what you're starting to see is that on the macro side, you've seen this sort of lock-in of mortgages where people who have had very low rates on their mortgages being unwilling to move. And you're starting to see, even with the wage increases and wage pressures, hopefully the mortgage rates coming down sort of helps that problem of job mobility and people moving and help with the volume of housing that's turning over. The other piece is that you're seeing in a lot of the transcripts, earnings, a lot of these big names within the home builders that have lending arms in addition to just building. They're really the sort of winners in this high rate environment. Yep, exactly. As you pulled up names like D.R. Horton, $40 billion name, because they can sort of win on both sides, right? They're giving you the mortgage and they're making money on the construction itself. It really often helps with some of their margins and really helps sort of continue the business in a way that smaller names like Beazer at the bottom might be under a bit more pressure.
RJ, you mentioned some big name home builders. You also have some big name backers for your firm. I just want to ask you about it. You got Stan Druckenmiller, I see, Thomas Petterfy. How did you connect with those two and how they helped your business?
Yeah, it's a great question. We've had tremendous support from Interactive Brokers and from Stan Druckenmiller and the Duquesne family office. I think there's really demand across the street to extract insights from data, right? A lot of people have access to data, but the really hard thing is processing it, being able to understand it, and really figuring out, how do I save time, right? And really a lot of those problems are, where should I spend my time? What parts of the market are interesting? And where should I be investing or investigating further? And that framework that we put together really resonated with Stan himself, as well as with the Interactive Brokers founder.
All right, RJ, very interesting, great insight there. Thanks so much for joining us here on Yahoo Finance. Have a great weekend.
Thank you, you too.